Good morning. Can everybody hear me loud and clear? If you'll either give me a one or a yes or just a shout out. Okay, awesome. Thank you, Sean. Good afternoon, maybe for some of you, if you're on the East Coast, I guess, or wherever you are at. Awesome, awesome. Thank you. Hey, good to see you again, Blade. Thank you, Leslie, Dory. Y'all ready for Christmas? Hey, Brenda. Hello, Helen. I am, for the most part, done. So I think I am. I certainly hope I am. Oh, you are? I'm flying to Florida tonight. Not excited about it, but it is what it is. So we take off at 9:30 p.m. So I'm going to be sleeping on a plane. So actually, I just realized I don't have the camera going. Let me get that going real quick. There we go. So yeah, I'm like I said, I'm not excited about a red eye, but it is what it is. And we'll give us a little more time. We only have a short window of time to get there and back. So, and my eyes getting better. I think it probably looks relatively normal now. So that's good. I'll give you your present right now, Brenda. How's that? We'll look at some stocks and see if we can find something good. Let me get the disclaimer out of the way, though. We're not registered broker dealers, investment advisors. I will not give you any recommendations or advice. Everything you do here is purely for educational purposes. So if we do talk about a trade, if I say anything, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading. So I'll go through the just all the highlights and stuff that's coming up. The premium online workshops trading you, of course, is twice a month. That was coming up. That's tonight. Patterns and Flash with yours truly on the 27th. So we had the holidays kind of give us a little extra gap. So, but so we had a 3-week gap between the last two. So it's weird too. I get a little anxious, like not really anxious, but it's like feels like it's been forever. It's just one extra week. But then Cover Call Explorer, December 29th. So I'm not sure what that is. Oh, I got you, Sean. Thank you. I just noticed that. Oh, good morning. And then Mastermind Group is Tuesdays 8 to 9. The free online workshops, Power Hour, Rob does, and then trading, the one we're doing now, right, every Friday. And then the Power Option Place is every Tuesday and Saturday. Cover Call Explorer Thursday, and E-mini Think Tank with Brandon Monday, Wednesday, Thursday. So you'll notice it's a little light, but that's what happens in the holidays. So we not as busy. Holiday stuff is cranking along. It's Christmas time, right? Time for family. So, of course, you can follow us, Wealth Builders HQ, on all the different social media sites. And then you got Rob's Covered Call. Covered Call Naked Puts, Diagonal Spreads, Covered Call Explorer. So, and like pretty much everything else you're buying right now, the prices go up soon, right? We won't go too far into that, though. But yeah, yesterday was certainly interesting. I was a little bit surprised when the market started higher, but then as it started to sell off and had just a steady sell off all day long, I was like, okay, that's more what I was expecting. But and gold, anybody watching Newmont, that thing just went crazy yesterday. It was up like 4.5 or 5. So, but what we're going to talk about for the first little bit is directional or non-directional. Which is there one that's better than the other? And some people have strong opinions about this. Mine's not really strong. I actually think, well, we'll get into it. I'm going to jump ahead of myself if I'm not careful. So what is the difference, right? Some of you, I don't know how, like I say, I don't know if some of you might be brand new to trading. Some of you might have been around a long time. Directional, non-directional. So directional trades would be like buying stocks, buying options, just going long. Non-directional would be, for the most part, selling to open. If you're selling a put, if you're selling calls, basically every selling strategy, even like bull put spreads, bear call spreads, since you're selling to open, those would be non-directional. Some of the, like the bull call and the bear put spreads, maybe they're more directional, but they could be seen as non-directional too. Most of them, though, it's pretty cut and dry, right? So here's the thing, and a lot of people ask me, I've asked over the years, which one should I trade? At first I say trade what you're comfortable with, what you know, and in alignment with your skill level, right? We're all different skill levels. Some of you might be, if you are brand new, you may be just learning the option strategies, maybe just learning to read the charts. Wherever you're at, the important thing to know is where you are at, right? Know thyself is probably the best advice you can get when it comes to trading. Because if you're pulling the trigger on trades and you're putting money into it and you're making bad decisions and you're doing things that, it's not a good place to be. You got to stop and look in the mirror and say, okay, why is this happening? Why am I doing something? And just know where you're at, know what you want to do, what your goal is, what you're trying to achieve. Some people love spreads, and spreads are a great strategy. Yeah, that's true, Blade. The downside, the thing that I don't like about spreads, and it's not that I don't like them, I just don't utilize them very often, is that you're capped off. And again, I'm jumping ahead of myself, but yeah, if you're new, you might, some of the selling strategies, and there's one of the things, and I would never suggest being dishonest, but brokers will ask you what your experience is if you're looking to get approved for options trading, especially more advanced, like level 2 or level 3 spread type of trading. And they're mainly asking you to cover their own backside from a legal perspective, right? So when you check the boxes, this is how much experience do you have trading stock? How much do you have with options and bonds or anything else that they ask? Those are usually the questions. If you put you have zero experience, then they're most likely going to shoot you down. They'll give you level 1, maybe level 2 for covered calls, but they probably won't give you level 3. Yeah, that's not unusual, Sean. I had to fill out an application to increase my permissions on TradeStation. And I had to do that on one of the accounts when I moved over to TOS. One of my accounts that I have there was something, I can't remember what it was, but I had to do a similar type of thing. They said, we need this application filled out to give you this level of trading on that account. All the other accounts were fine, but for some reason, this one, I had to fill out some weird application too. So they just, like I said, it's mostly just them covering their backside. So again, I wouldn't say to be, I wouldn't promote being dishonest, but if you understand why they're doing it and you want to get approved for it, just be careful. I mean, if you're going to do some more advanced strategies, be wise. Paper trade them first. That's the best thing you can do, so you know what to expect. Really? That's interesting. I don't know. Yeah, I'd maybe look for a new broker if that's the case. I don't know. I mean, but everybody has their own rules. Each broker has their own set of rules. So if the broker you're working with has a minimum net worth deal, and some of them do. Some of the biggest, the Goldmans, some of the bigger name that do money management, they're usually looking for that type of stuff. Most of the smaller, the trading type of platforms like the TradeStation, TOS, some of the other ones. What was the other one I had originally was, what was that? If you're doing spreads and non-directional trades, it's actually a really, really cool platform. Yeah, Ameritrade and Thinkorswim is owned by Ameritrade now. So same thing, TOS. What was that one? It's actually on the Wealth Builders website, where I'll put it up as one and it's great for spread trading, but they don't have conditional and contingent orders. That's why I was there for a year. Yeah. Tastyworks. Thank you. Yoasty? Is that another one? Tastyworks. Well, I don't know what that is, but, or is that autocorrect? But yeah, Tastyworks is really, really good if you're doing spread trading. They have some really cool features for that type of non-directional stuff. So, but if you're expecting a big move in a stock, and here's my opinion, if you are expecting a stock to move a lot, a non-directional strategy is not necessarily the best. Because when you sell an option to open, when you start with a non-directional type of strategy, that's the maximum you're going to make. If you expect a big move, typically you want to buy the stock or buy an option, right? Again, getting a little ahead of myself, but here we go. So let's say you expect the stock to move from 20 to 25, right? Which is a 25% move. If you buy a call and the stock moves to the target, a 25% move in a stock is going to get you right around a double on your option. Again, I'm just basing that off of experience of 20 plus years. And because typically an option moves about 10% for every 1% the stock moves. So if a stock moves 1%, your option typically will move about 10%. So theoretically, a 25% move would get you 250%, right? If you go off that, it's just kind of a generic rule. But I was being conservative. So, and a lot of it depends on the stock you're trading too, and how much the options are and how expensive they are. So there's a lot of other factors in there. So, but if you get a 25% move in the stock, you're going to probably make a double, if not a triple, right? Whereas if you do a spread, if the stock's at 20 and you expect it to go to 25 and you do a spread and you get, say, 15 or 20 or 30% rate of return, you collect, say, $1 on a $5 spread, that's a 25% rate of return, right? Or 20%, depending on how you want to slice it. Everybody does the math differently. If the stock moves from 20 to 25, that 25% you're getting rate of return doesn't change. It's the same. I mean, you still make money, and there ain't nothing wrong with that, right? But you're not going to make any more than what you get at the outset. So that is one of the reasons that I don't love non-directional trading. That's why 99% of my trading is buying calls, buying puts, or buying stock, right? See how things are going. Waiting to hear some dings. Waiting for NEM, see if it'll bounce back up, head back up. So, but I like this. The market drop is good right now. I got a lot of bearish positions. So today's a happy day. Yesterday was a happy day too. Every day's a happy day. Well, some days are not as happy, right? When things go up, when you're set up bearish and you're upside down a bunch, it's like, well, do you get out or you hang on? And sometimes you just hang on and trust that all the data in the charts are still accurate. So now let's say you expect the stock to stay above 20. Look, a little different scenario. So if you analyze the chart, you think it's going to bounce or it's going to go from 20 to 25. Like what's the Kupang is the one that's been on the radar for a couple of weeks now. It's right down around like 26. There's a support level, and it's been bouncing a little bit. So if you expect it to move big, then that's one thing. But let's say there's a very solid support at 20, but you're not sure if it's going to go up. If you buy the option and the stock just sits and dances along 20, what happens to the time value of the option? It degrades, right? Over time, you're losing money. The credit spread, though, if you do, say, a bull put spread, if the stock goes sideways and doesn't bounce to 25 and just sits there and dances on 20, now that's where the non-directional credit spread becomes profitable. So the non-directional trades, most of them, the vast majority of them, you're selling an option to open, right? Whether you're just selling a put or you're doing a credit spread, the time degradation works in your favor, and that's what you want. So if you expect a stock to go sideways or you don't know which way it's going to go, you just say you are pretty confident that it's going to stay above a certain level, that's when a non-directional strategy can be best. So again, I don't think I made this point before, is that when I get the question of should I do directional or non-directional, should I buy calls or do credit spreads? Those are the two most common, right? Or buy puts in this environment. The question is, what does the chart look like? I mean, does it look super bullish or super bearish and it's going to probably move big? Or do you just think it's going to go sideways? And once you analyze the stock, now you can pick. So I don't advocate picking a strategy and just doing that strategy. I say, look at the environment, look at the chart, and determine the strategy based on what the chart says. So this one, for example, what do you do with this? I mean, the stock's stuck in a range, and again, it's just an example, and then we'll go to actual charts and start looking at those. And we can look at a lot of different stuff. If you all have ticker symbols you want to take a peek at, get ready. You can start load them up. I love it, Brenda. Punt. That's not a bad strategy. Punting is a good strategy when it's the right time. So maybe we should add that strategy to the list of strategies. It's the punt strategy. Look for something that's trending. That's what, and that's the thing. Y'all that are answering, it's awesome, and every single one of you is right. There really is no right or wrong answer, right? And a lot of stuff with regard to market, especially trading, is subjective, and there is no right or wrong answer on this. Look for something that's trending. That's a good option. You look at it, you go, I don't want to do anything on it. Iron Condor, that is an option. Channeling, yeah, calls and puts. You could trade the channel. You know, if it gets down to 1941, pick up some calls. If it gets up to 2287, sell the calls and buy some puts. They're all right. But here's the questions I would ask. Iron Condor is a great strategy. The question becomes, what happens if this breaks out of that range? And where do you go with the Iron Condor, right? There's a lot of little variables to do. And Iron Condor is a great strategy for something like this. It's probably the best thing you can do. Yeah, exactly. Sell the one side that's losing. So in other words, I guess what I'm getting at is, if you're going to do an Iron Condor on this, have a good plan, right? If you sell the 24s and say 18s, if it breaks out of there, what are you going to do with it? You're going to buy back the one short and then hope it runs. And then the question becomes, how much time do you have? So again, that's one of the reasons that, even though I love spreads conceptually, the challenge I've always had with spreads is unwinding them when they go against me and trying to make that work. And I know a lot of us have, in the past, at least I used to, and I know a lot of other people that did, when I was still learning spreads, was, you know what, even if it breaks against you, you can make even more. And that is possible. I've just never been able to pull it off. And I don't do a whole lot of spreads anyway. So maybe it's just I didn't do enough. If I did more of them, I'd probably have one or two hit. But the reality is that most of the time when you do a spread, you're selling as little time as possible and you're going out of the money, right? So if the stock breaks and stops you out, then it's got to move, because you have not a lot of time left, and typically you're a little bit out of the money. So the stock has to move big for that long leg to get profitable, right? And I just, the few that I've done, I've probably only done maybe 10 or 20 over 20-year period. I just haven't done a whole lot of spreads. So, and every one that I've had go against me, I've tried to unwind, and then you unwind it and it either sits and stops going anywhere, or it turns back the other way. So I don't know if it's just me, or, like I said, if I did more spreads, I'd probably have a percentage of them that would move big, and I'd have that happen. But and I've seen some and heard some really good stories. I had one guy that was, slated to make like $1,000 or $2,000 on a spread he did, and the thing busted big time. He pulled the short leg and ended up making like 50 grand. But those are rare cases. They don't happen very often. So, because stocks just don't move big like that as much as we'd like them to, right? So, yeah, if non-directional is not your style, then yeah, look for something that's trending. So just skip it. Like Brandon said, punt, right? Skip it and go to something new, something different. Or you can sit and wait for it to break out and then go directional on it, right? Because you've got, if it breaks to 1940, you've got support coming in about 15 or so, maybe 14 even. If it breaks at 20, basically 23 level, there's a little run up to about 26 is the next level. So a lot of different options, pun intended, and lots of different things you could do, right? And that's why there's no right or wrong answer. Yeah, okay. Now I understand the amen, Jonathan. Yeah, and I've had that happen once too, where he's talking about unwinding. You unwind the short leg, and then it turns around and goes back, and you take an even bigger hit than you would have if you just would have unwound the whole thing, right? So that's one of the reasons I'm not. I don't love non-directional strategies in the right situation. Yeah, but I don't do it very often. So. All right, I think, yep, that's the end of it. Forgot my little saying on there. So now let's go, and thank you, Brenda. You know what? I'm going to do this one more time real quick. I updated already this morning, but we'll do it just shortly before we start. We'll update it again. No, I don't need criteria done. Take a quick peek. I think I got out of one a little too early this morning, but that's all right. Still got some there, so if it keeps going, which I picked up a little bit yesterday. I added to a position and then just took out part of it today with 30 or 40% gain on it in a day. So I'm like, okay. And I still got a little bit of position there. So if it keeps going, then I'm in good shape. If y'all have stocks you want to look at, then start throwing them in the chat box and we'll take a look at them. Why do I use a 22-day moving average? Are you talking on the volume down here at the bottom? Well, there's 20. I don't know why it's at 22. It's probably the default. There's 21 trading days in a month, right? The average month has 21 trading days. So I think they just put this at 22, and I've never, one day is not a huge ordeal. So it's basically a monthly moving average then on the volume. Right. So that's why it was there by default, and I don't care that much to change it. I can make it 20, I can make it 21, you can make it 25, and it's not a massive change. And I don't, the moving average on the volume is not, it's not something I look at a lot. I mean, I look at it, but is it a massive indicator that I put a lot of emphasis on? No. You use a 5-day, a weekly, basically. Does it work for you? Because if the answer to that is yes, then good. That's all that matters. Yeah, I'd be interested. I don't know if I can. What does a 5-day look like? There it is. I kind of like that in a way because it moves fast. Obviously, it's just faster. The smaller number you give it, the quicker it moves. So I guess a lot of it depends on your time frame. Is what are you looking for as far as volume goes? But it's weird. I kind of actually like that because you can see these big spikes like on this. I mean, this is the Qs, right? So this arena right here, let me blow that up so you can all hopefully see it better. Well, we've got what looks like a miniature little head and shoulders, kind of. Yeah, we basically do. The neckline's not beautiful. I don't like a down sloping neckline, especially, and this is fairly steep. So I'm not in love with it. If it was that right there, that wouldn't be too bad. But this one's pretty steep. But, oh, whoops, it just changed back. Well, you can see, though, and I'm not going to mess with it. You can see the massive increase in volume with this sell-off here, which if you don't see the bearishness in that, and this is where I think, and those of you that have been with me know for a year, I've been talking about being bearish. I mean, the market keeps running higher and it can go for a long time. I just read an article the other day of a guy back in, I think it was 2000, there was a 2008 crash, the 2000 crash. I think it was the 2000 crash. He predicted in 97. He kept looking at it saying, this market's crazy. It's overvalued. And it just kept on going for 3 years. And that happens a lot. It's not uncommon. You can see, if you've been doing this long enough, a lot of times you can see the signs that eventually it's going to come down, but people keep pushing money into it, and or at least they did. And if you look at each of the drops, back here, kill that, we get a little more on there maybe. It sold off back here. We had a big correction, big volume correction here. I mean, which is normal, right? You usually get a pretty good acceleration in volume when it drops off. But when you look at the volume as this thing's rallying, especially this last rally up here from 350 to 370, 380, the volume is dropping off big time. You look at the longer term month-long moving average, the volume's getting really light. And then when it sold off here, it picked up again. And then we had pretty solid volume actually on this last big rally, which isn't a huge surprise because you look at the longer term trend, you can see that trend is very solid. And we came down and just tagged it and turned around and took off. So those people that are bullish, that are trading the upside, are loving this. They're going, hey, this is great, and pumping more money into it. And then we got the left shoulder, and then we get the head, which is also coincides with a massive bearish engulfing pattern. Big volume. It actually engulfed 2 candles, which makes it stronger. Big volume. That makes it stronger, which preceded this drop. So no surprise at all that we went from 400 to 380. But it's also not a surprise that it stopped there at 480 because that's the previous high here. So they dug in, a little tweezer bottom, boom, pops again. We failed to get to the new high, rolls over, and the volume's accelerating. Another bearish engulfing pattern, even though it's not textbook because it's not. This is where you want to see it at the very top, but at the same time, we're basically at the tops again. So we get a bearish engulfing pattern yesterday, and then this morning, of course, we gap down a little bit and holding on it. If it breaks this 381 level and closes below it today, yeah, I think we're probably off to the races to the downside. That's my opinion. I don't think this move is going to hold up. And all the signs, you got accelerated volume at the end of most days now. The market seems to sell off. Yesterday, it gapped up a little bit and it was just like a slide all day long. And it just kept selling. It bounced a little bit, and then it sold off again. So all the indications to me, especially with The selling is every time it rallies, it seems like there's everybody selling it. So I think we are in the process of shifting from bullish to bearish right now because the bears are coming in and pushing it lower at the end of the day. No, that's perfectly on topic, Wade. I use toss, think or swim. I looked at TradeStation, but it was a little too much to set up for what I wanted at the time. I'm debating whether to go to it, but I'm pretty good with this now. It took me a little while to figure out some of it. I still don't know a lot of it. I mean, a lot of the functions and stuff I have, I got the basic stuff for it. So I got what I need, basically. And if you know me, I'm a very keep it simple kind of guy. It's like I don't want to make it more complicated than necessary. So, and I didn't really see any massive advantage for my style of trading. I didn't see any huge advantage to going with TradeStation or anything else. And Tastyworks, like I said, was okay, but they didn't have contingent orders. They didn't have a lot of stuff. But as far as Qs go, is that what you're looking for, Brenda? You can see here when you get to a line chart, that head and shoulders is pretty clear. So, and if we break this, like I said, the neckline I don't like, but if we break this 380, 381, the next level is about 370, which is that trend line. I would expect it to bounce there actually. And yeah, you can see there's the 50-day, which we are below right now. 200 days here. So I think level-wise, somebody said 356. Yeah, you look at the 200-day moving average or this level right here. Yeah, I got a lot going on. So if it breaks 381, the next spot that it'll probably dig in is about 370 right there at that trend line, 370, 371. I would imagine it will stay there. If it doesn't, it cracks right through that. Then the 200 days is the next level. And if it doesn't hold that, then 353 is the next level. So we'll see. There's a small gap. Oh, down here. You're thinking they want to fill it? Yeah, possible. I mean, it's not real huge. So I don't know how. I don't know if too many people are looking. I mean, I didn't even see it, but yeah, a lot of gaps fill. So we'll see. Personally, I wouldn't put a lot of emphasis on that. I think it's still going to drop anyway. I mean, with what the Fed came out and said the other day, and then inflation and a lot of the other stuff the major economic factors don't look good. It doesn't paint a rosy picture. Let's put it that way. They're going to raise interest rates next year. And for 2 or 3 or 4 years, people that are buying houses are used to these really low interest rates and they love it. And once they raise interest rates, that inverse relationship is going to take over and it's going to flip. And the prices, the valuations of homes are going to start to drop. Right. So, and the housing market is going to slow down. So, and I know around me, there's a ton of building going on. There's huge tracts of development going on. It's like, what's going to happen to these developers when the market slows down? They have to sell it for less. And they've got, lumber prices were crazy. So you get all these different things swirling around and it looks like a perfect storm. So, we shall see. And I know I get some people that can get cranky. And I think I've said this a few times lately is that, because I'm not bullish on this market at all. Whoops, what just happened? Look at this. What just happened? Did I accidentally delete the price chart? What is going on here? Whoa, that's weird. All right. I don't know if I'm going to reboot this thing real quick and see what happens. I guess we do this and let's look at it real time, see what's going on with it. Yes. CLSK. Is it Lakshmana? Is that how you say it? I'm just wildly guessing at it. Hopefully I got it right. Let's see if my mom taught me phonics properly or not. Okay, good. My mom was a teacher, so now I get angry. Thanksgiving, my son said something that was incorrect, right? Grammatically incorrect. And she didn't even correct him. I looked at her, I said, "What are you doing? You're not going to correct that?" She goes, "Nah." It's like, that's not even fair. Every time I said something wrong, she's always it's not that. You got to say it like this. And now I'm like my mom. I was correcting my daughter this morning. I was taking him to school. It was like, she said something wrong. Like, you mean this? Oh, yeah, okay. So my mom always corrected me. It was so bad that I finally gave up. I finally started saying things incorrectly just so she'd stop correcting me. And she finally figured it out. So she stopped correcting me. But now she doesn't even correct my kids. It's not fair. Anyway, Clean Spark. I don't know what these guys do. And honestly, I don't really care that much. But here's a daily. Let's see if did that come back up? Oh, no, it's still unloading. That's weird. We'll just use this. This is toss if you're asking. I did break her, huh? I never thought about it like that. So Clean Spark, I'm guessing, is some kind of energy company, like batteries or something like that, electric cars. I'm assuming it's in that field. I don't know anything about the company. I'm just going to analyze the chart because honestly, I don't care what the company does. The chart looks good. We'll trade it. I'm going to move these up here, get them out of the way. Whoops. Oh, which one we're getting there? That one. Where's Will at when you need him? Usually when I say, I don't know what this company does, Will comes and brings up a thing and sends it in saying what they do. But like I say, it doesn't really matter to me. If the chart looks good and it's tradable, I don't know if you're bullish or bearish on it. And honestly, another one I'm not too concerned about. The question is, what does the chart look like? And there's looking for the next level of either support or resistance. There's not a really super clean spot there. It's right about 14 is where it dug in right back here, right? So I don't know how much more time we can get. Can we? I don't have longer time, but that's okay. That thing is still sitting there. That's weird. All right, we might be stuck here for the next 20 minutes. So yeah, it looks like it's got a solid support there, about 1070. I mean, it's bounced there, but when it sold off from here, it obviously went to a high of 42. And this is a pretty common chart. This is another reason. A lot of these companies that were massively overvalued over the last 6 to 8 months and 10 months have gotten hammered. So, I mean, look, at Peloton was 170, 180. It dropped it's at 30 or 40 now, maybe 50, which isn't a surprise. I mean, first of all, it was a pandemic trade, right? A lot of people were buying Peloton, so they had, a short-term pop. But then a lot of people came into the market. Right? There's other companies that do the same thing. And it's like, how are they really going to continue to generate revenue? Just looking at it from the business side. But the chart also was showing. We traded a couple. There's a beautiful Head and Shoulders right at the top. And that was a pattern of the week last year. I think I want to say March, whenever it peaked out. And that one worked out beautifully. And then there was another one when it broke 100. We rode up from 100 to 85. So this thing dropping off here dug in about just shy of 14. So if it rallies from here, which it looks like it's starting to at least, right? The next level, the first level it's probably going to hit is 1387. But if it does what it did last time, you can see here, it just took off a ramp. So hard to say what this thing's going to do. You know what? I'm going to do this. Give me just a sec. I'm going to pull up this. Because this thing is just not shutting down. I'm going to do the end task thing, see if that works. Oh, really? I didn't see that. Peloton was news. That makes sense. A couple of toddlers killed. Who? I guess I wonder how. I mean, I don't want to jump to a conclusion without knowing anything about it, but like, how do you let your toddler? Do they get on it or what? I don't know what happens, but I guess I'm thankful that my kids are older and I don't have to worry about that being little kids, but I have to worry about driving now. My son's old enough to start driving, but let's pull up the, while that's reloading. So obviously it's going well today. The question becomes at what point is it going to continue? I mean, is it going to continue to the upside? So as far as analysis goes, there we go. Okay. I don't know what happened there. And I don't love the charts on top. They're fine. The charts are fine, but I'm just so used to Omega charts and how it works and functions. It's just so much easier for me to use. As you can see, I mean, I rip through lines like that very quickly. The next level from there is probably right about 16. Yeah, I'd say there. I'm just looking for, if you're wondering, like, why are you drawing that line? Well, here's a spot. Here's support levels right here. Trying to catch as many of those, the more times it hits on a line, obviously the stronger it becomes, right? So I don't know, Brenda. But what's the long-term picture look like on this? It's not even that old. It started at $4, rallied. Where's the bottom? If it breaks the floor, about 850. So definitely building a nice little base right here. I mean, $10 is a good spot if it keeps going. Will it run up to 22? Hard to say. Let's see what just look at indicators real quick. Not much really there. MACD's not really telling us much. Neither is that. So there's really nothing from an indicator perspective. So I'm not in love with this thing unless if it dances on this 1075 area a little bit more and holds it. I mean, you definitely have right here, you got a bullish engulfing pattern, right, with big volume. So that's a good bullish sign. Zoom way in here. So if it does take off, I would personally probably wait for it to break above this 13 and look for a run to 16 if this is something I wanted to trade. I don't know that I'd trade it off here. You could. If it pulls back down here in like a few days, the next week or week and a half, it holds above that level and does what it's done here, then I'd maybe get bullish on it. So. Oh, really? Yeah. I mean, that's awful. Too big a space to 4. They got stuck. Yeah, it's terrible, obviously. I mean, none of that stuff is ever good to hear. So, but I didn't know that. I hadn't heard that about Peloton. So I don't watch that show. There's some Sex and the City death on the show. I don't know what. Yeah, I didn't hear about that. But then again, a lot of that stuff I don't pay that close attention to. So we'll take a look. If anybody else has any stocks they want to look at, throw a ticker symbol in there real quick. We'll see if there's anything here that looks good for today. Baker, that's one that this has been bearish for a little bit, but it hasn't broken down yet. BSX was great. MU, that's on one of these lists I have here. So this is one of the pattern of the week that I showed back here on the vertical line. And this thing dropped real quick. I know I picked up a little bit of a position at 41.13, picked up more at 40.57. I closed out some of it, I think on that big down day. Closed out part of it there. It continued to drop. I hang on to it, and then it bolted really quick. And then a couple of days ago, I added back to it. I still had a small position here. I decided not to stop out. I thought about it, but I was like, I'm profitable anyway. So I didn't have to get out. And then as it started to fall again, especially with that volume acceleration, I got back in. I reloaded the position. And now I'm wanting it to drop back off, but we'll see what happens. Micron, this was a pattern of the week this week, actually. Really, Leslie? Is that now when you say the main character died on a Peloton in the stock, was it the main character meaning like in real life, the main character in Sex and the City was on a Peloton and died, or they did it in the show? Like it was an act where they showed the main character dying on a Peloton to get rid of the main character from the show. Oh, the show. Okay. So it wasn't, nobody died in real life. It was part of the show. They created the death from a Peloton. And that made the stock tank. Well, if that's the case, it's kind of funny. So you get stocks moving now based on a TV show. That's how insane this market is. Okay. That's how crazy it is. when you get people that are selling their stock because they see on some TV show that an actor is killed on the show to get rid of him from the show. Are you serious about that? That's crazy. The actors doing ads for Peloton. I guess that's a way to, get your brand name out there. That is crazy. That's probably one of the crazier stories I've heard about stocks movement and why they do. But as far as Micron goes, well, yeah, that's today's. Oh, we got earnings. That's right. Earnings is Monday. I remember this now because I did it, highlighted as a pattern of the week this last week. And so you should all have that. I don't know if I saw the email yet. It might get to you today. But Micron's one that I did in the pattern of the week, inside patterns and flash. And having earnings Monday was one of those I didn't look because I thought earnings season was over and wasn't paying attention. But pattern-wise, we have basically a pennant. But I'm not in love with it. It's a little too much. Usually a pennant, the pennant form should be a tighter range. This thing's really volatile, bouncing a lot. I mean, 5, 6, 8, 10% moves from the top to the end, the lower part of the range. So it's a little too volatile for the pennant to be really spectacular. And we're getting to a point where usually we want it to resolve to the upside within about 3 weeks. And we're kind of right on the edge of that. So I don't love it. If it did move higher, if the market turns back to the north side, this thing takes off and breaks out of that upper end, then I'd be possibly interested. But earnings is coming out on Monday. So yes, Brenda, it is. And that's unfortunately the reality we live in. As you say, people are losing their ability to discern the truth from a lie. And what do you believe? You hear one, from one source, you hear one thing, and then from another source, you hear the opposite. I mean, what do you do? So, you're seeing the gap. I think earnings is going to be a big driver of that. I think ultimately this will probably fill, but that's based on my belief that this market's going to correct. So I don't know what, let's see what they're doing in real time. If there's any clues on the intraday chart. Not much. Things just going sideways. Gaps down, dancing around. It rallied a little bit, filled the gap from the morning, dropped back, and we're just sitting and going sideways. So, amen to that. Any other stocks y'all want to take a peek at? You want me to just keep going? Here's Coupang. That's the one I was thinking of earlier. Oh my goodness, they took off yesterday. Oh no, that's today. That's right. I forget that I updated it. Almost every morning, Brenda. Coffee in the good book. Little routine. So, wow, Coupang's taken off. That's in a way a little bit frustrating. This is one. What was it? What was the one that we were looking at? Was it CLSK? Is that the ticker? Yeah, CLSK. Lakshmana. So this is what I would want to see on. See how we're just basically hitting this spot again. What I want to see on CLSK is more of a base building like this, where we had a double bottom. It actually broke out. We played this in the pattern of the week, and then it came back down. And when you really start picking this apart, you got a bullish engulfing pattern that, even though it broke below the day before, it broke below that 26 and closed there. It did on light volume. Bullish engulfing pattern with light volume. So not a whole, I wasn't excited about it when I saw that. But then a week later, we get this hammer pattern right there at the support again. Right, we come back, we touch that 26. The next day we drop off, actually made an intraday low or an all-time low right there. By the end of the day, it closed back above that line. That's a very bullish indication, right? The next day it pops a little bit. The following day we get a little, is it a Dragonfly Doji? I don't see it very often. So Gravestone Doji. No, this is a Dragonfly. Gravestone's the other one. I get it mixed up. But whatever it is, who cares what name it has? And then the next day it popped for a couple days and pulled back. And now here we are again fishing, right? This little hammer type of pattern again. We came back to 26. So not a surprise to see it popping today. And it looks like, I mean, we're only 3 hours into the market and we're already at the average volume. So, but this is the hard part. If you're not in it before it moves and you miss that kind of move like that, it's a little late to get into it now. So What? Where's the catfish reference or bass coming in? It's yeah, I'm not sure. I'm not sure what that's referencing, but um, so yeah, here's Kupang, and it would have been a beautiful trade to get in this morning, first thing, but woulda, shoulda, coulda, right? I don't live in that world. Sometimes I get cranky. You look at it, go 27 to $29 in an hour and a half. That's 2 points. Even if you just day traded it, just picked up an option or just bought the stock, that's a good move. So, and Newmont's been good the last few days too. So, and you can see as it's moving, had a nice little pullback here. Now it's moving back higher. The volume's accelerating again. So it might just keep on going. But at this stage, I would maybe do a day trade on it if it breaks 29, because that is printing some pretty solid volume here on the move back to the upside. There's another hammer type of pattern right here. It's not textbook, but it's there, dipping down and finding a new bottom. So, oh yeah, talking about fishing for the bottom. Well, and that's where that's basically what the hammer pattern is, right? I can't remember it's been years ago since I read Nissen's books, but the long shadow on the bottom with the hammer, those types of patterns, the Japanese term is it translates into fishing for the bottom. That's where that comes from. So that's why it was in my mind. It just came out, and I like the analogy actually, because it is, you're looking for the bottom. They keep dipping it down. It's like sticking there. Or maybe it was the reference to the, when they're pushing the boat with those big sticks when they're in shallow water. It might've been that they're looking for the bottom, right? They're punching it down and trying to find where the bottom's at. So, and you get something like this. Monster bass. Yeah, I don't know. Oops. Close part of the position. I like hearing those dings when it's the right way, when it's not a stop. So this is, to go back to it, this is what I would like to see with CLSK, is to have it dance on that line and hold it for a while, and maybe get some little dips like this and show us that we're probably going to hold that level. That makes sense? There's another one. I wonder how Dow's doing. This is another one that was on pattern of the week. Still just kind of sideways, waiting for the next break to the downside. As long as it stays below that 55.20, then I like the looks of that. Ford, I don't like this anymore. This is another one that the vertical line, this is another flag pattern, right? Where we got this big boost to the upside, all based on earnings news, and now it's just dancing, going sideways. It's a little too big of a range for a flag type of pattern. Usually you want to have it, tighter and smaller, and basically it's just a resting pattern. And then we had that day right there is, I think that's the day, I don't remember if that's the day I did it or not, but that's the day we looked at it. So thankfully I didn't get into this because the entry points are there. But I don't like it. It's too sideways, and that one big break to the upside, and then it sold off the next couple of days. So I'm not too excited about Ford. Microsoft's a different story. This one's beautiful. I mean, it's been kind of crazy and bouncing around a bunch, but there's a little miniature head and shoulders right here. Wasn't real big, but I took advantage of it. And I think it was this day, just before that big drop, jumped on some of it intraday, did a short little day trade, and then it tanked off the next day, and I closed out, I think, half or 2/3 of the position. So I've just got a small position on it still. And I was tempted to add to it over the last couple of days, but I didn't. I thought, I'll just hang on and see if it goes. So, good question. Actually, that was, thanks for bringing me back into the subject we're talking about. Sometimes I get so lost just analyzing charts and I forget that I had a subject for this, right? This actually looks kind of like the example chart I had in the PowerPoint, huh? The question is it where a non-directional would work well? And yeah, actually, I think it would. I think I wouldn't be surprised to see Ford stay above that 19 level. I don't know that it's going to go a whole lot higher. I wouldn't expect it to break higher. So that's the big question is, what do you, I mean, obviously we all analyze the chart and the overall market differently. And I'm certainly not bullish on this market. I think it's way too high. And there's a lot of macro indicators. I mean, Buffett's indicator is at either all-time high or close to, I think it's at an all-time high. Buffett has an indicator that he uses, something I can't remember. It's I think it's the earning, like the S&P earnings divided by the GDP or something like that. I can't remember exactly how he calculates it, but it's either at an all-time high or it's really close to the levels of the 2000 crash. So, and there's lots of other big indicators. So I don't think, and this is where, if you're going to do a non-directional on forward, I would personally be looking at doing a bear call, not a bull put, because I think there's a higher chance. I think the probability is higher for a drop than there is for a big rally, especially with the behavior we've got in the last 4 weeks, right? We had a big rally and it broke out big time that day on the vertical line, but then it failed and didn't hold it. So the bulls couldn't hang on. So there's a good question. I'm curious too, is I wonder what you can get for it. Because it's not Ford's not a super volatile stock. It's not super high priced. Obviously it's about 20. Let's see. I'm just curious what we have for options. I don't know if weeklies would have it. We'll take a peek real quick. So it's at basically 20. You could, wait, we want calls. If we're doing either a bear call or, I mean, you could sell, don't sell naked calls. I wouldn't, but you can. It's a little bit crazy, but so where are we at? So there's the 20s. I should just, I'm not gonna mess with that. I'm gonna do it old school way. I know you can put in spreads now. And it's like, it's easy. Maybe I will. I don't do this very often, so bear with me here. Where's the, oh, yeah, they call it a vertical. I always, so the 20 and a halves are, let's see, bid ask 17, 19. So you get probably 17 or 18 cents on a 50-cent spread. That's a weekly. Actually, that's a really good rate of return. I mean, it's only, but it's right at the money though, too. I mean, the stock's at 1987, right? So if you hit the bid, you get an 18-cent credit on 10 contracts. It's $180, and you've got 320 at risk, as long as it stays below 20 between now and Friday, or next Friday. Yeah, next Friday. 18 cents with, what's that, 32? Wow, that's about what, 50, 55%? It's pretty solid. But if it goes against you, I mean, if it moves up, then you're probably going to have maximum hit. So see if, well, if you go to 20 and a half, 21s or 10 cents, you might get 11 for it. But 10 cents, so that's a 25% rate of return for a week for a non-directional. That's not too shabby. So if you did 10 contracts, you got $400 at risk. So if you can't unwind it, or if you just want to say, you know what, I'm just going to put it in and let it be. And if it goes against me, I'm going to take a $400 hit. If it doesn't, I'm going to make 100, $110. Yeah, exactly what I was talking about earlier. If it goes bad, because you got now till Friday and you're at 20 and a half, unless, well, and if it moved like this, if it made a move like that one day right there on the vertical line, remove that. If it made a move like that, then you'd be golden as long as you got out at the right time. As long as you try to unwind it. But there's the tricky part, is timing it right. So you unwind it at the right time, and then it really needs to run, because you literally have, if you put that on now, you got 7 days. And you're having to time it. You're having to time 2 positions. It just gets really hairy trying to unwind them. So it's one of the reasons, if I did this right here, I would probably put the 20s on and just leave it. And if it closes below 20, great. I'm making 170, 180, 190 bucks. If it doesn't, I'm taking a $300 hit. It's really not a massive, I mean, well, I don't know what you're all working with. If you got $1,000 account, that's a massive hit. If you got $1,000 account, you shouldn't be doing 10 contracts anyway. So yeah, I mean, I kind of like it. Actually, I really didn't expect that kind of rate of return, especially for a weekly. I did not expect it to be that good. So, and honestly, I'm kind of tempted to do it, but I'm going to hold off. So let's see what else. Microsoft we looked at. NEM, this is another one. This is another, yeah, good old Nike. Actually, Nike's one. Where is it? Did I not do that? I swear I put Nike in here. I think that was a pattern of the week this last week. Holy cow, we only got 4 or 5 minutes. Okay. I don't know how many of you were, and I've got to quit right on time. So y'all remember doing the Benzinga thing? Cause I'm on Benzinga right at 10 o'clock. So I have got to close this up in the next 2 minutes. This is, what was it? CLSK, I think, if I'm remembering that right. This is a base building type of thing I'd like to see on CLSK too. And Newmont just, it just built this beautiful base right at 53, and now it's just boom, taking off. So any other questions real quick before I fill the gap? Yeah. Oh, I gotta mute that. Bear with me just a sec.
We have COVID cases rising throughout the US.
I don't know how to.
And it doesn't make sense.
Bear with me just a sec. I don't. No, that didn't work. I don't. Sorry, I apologize. I gotta. So if y'all want to get on YouTube and come go to Benzinga and shoot, I don't know how to mute this thing. I apologize, but I know a lot of people didn't like it last time when we went. I don't know how to mute this thing. I'm gonna leave this for just a second, real quick. Okay, there we go. I'm not gonna worry about that. So, but we will call it a day. So appreciate y'all coming and hanging out. So yeah, Merry Christmas to all of you too, as well. Happy trading. Yeah, there's the link for Patterns of Flash. If y'all want to jump in there and take the trial on that, come out and join me on the 27th. So there will be, for those that are in there will be no pattern of the week this next week because I'll be gone. I'm going to Florida. I won't be back till just before Christmas, and then got to drive down to my sister's in Portland, and do the Christmas stuff. So there we have it. Appreciate y'all. Y'all have a wonderful day, and Merry Christmas and Happy New Year. We should see you before then though. So, all right, take care. Bye-bye.